Good morning. Welcome to Develop Your Edge with Anthony Crudele. I'm your host, Tom Schneider, CMT with NinjaTrader. Before we get into the good stuff, I want to remind everybody that futures and options trading contains substantial risk. Not for every trader, you could potentially lose all or even more than all of your initial investment. That's why we recommend you use risk capital. What is risk capital? It's money you can afford to lose. Doesn't keep you up at night, doesn't extend your retirement horizon. I also want to remind everybody that past performance is not indicative of future results. And what we talk about here on this program contains neither trade recommendations nor financial advice and should only be taken for educational purposes. And with that out of the way, I'd like to welcome Anthony Crudele. How you doing, Anthony?
Hello, Tom. How's everybody else doing out there?
We're doing well out here on Long Island. We're getting a little bit of chill going, but it's been a great start to the year. I can't believe we're almost 3 weeks into the year.
You know how life goes, Tom. Every new year, it seems like it goes faster and faster. In my 40s, I was telling my old man the other day, he goes, wait till you turn 60. He
Oh
goes,
yeah. Just like that. And my kids, I've got a teenager, I've got a 20-year-old, I've got a 10-year-old, and I know the 10-year-old is just sitting in class and the minutes are dripping by. And meanwhile,
totally.
we're in the third week of January.
And we're
So
trying to hold on. I know we're saying slow down.
slow down. Yeah, but how you been doing?
I'm doing great. It's actually been a good start to the year. And a question I get all the time that I think was really perfect for today's show was, how do you hold on to winning trades? And, there is no exact formula to this, but I have some simple rules that anyone can follow that I think are really three things that could help them get on the path to achieving that goal. And the first one is know what the primary trend is. And, I think that for day traders, and I've seen this over the years where I've talked a lot about either the macro environment and the technical environment on a longer term chart or longer term time frame. And you see these day traders say, well, why do I need to know that? I'm just scalping in and out every day. I'm just looking for my 2 points, and then they say that doesn't really matter to me. Now, mind you, I do understand that. I traded that way for many, many years. As time has gone by, the price of the S&P goes up. Most people are scalping S&P or NASDAQ. So a percentage move gets bigger. So it gets harder to manage risk in a scalping type way. So you try to hold trades a little bit longer. So what I try to do is have a stronger hand in the market. I don't want to be scalping as much. And if I understand the primary trend from the macro side of things, like what's going on in the big picture, and I understand what's happening in the big picture of technicals, that allows me to have a stronger hand in the market. And what that ultimately means to those of you that maybe don't understand what I mean when I'm saying that is, when I'm in that position, I have more confidence and conviction to hold it, right? Now, the conviction might come from watching the price action in the market on any specific day. That's on top of it as well. But understanding that what the primary trend is on both the macro and the technical side of things, when you come into the day, you understand where the bigger picture move is happening. You understand where the bigger money is moving. If you go back and look at last year, and we talked a lot about this at the end of the year, I really just followed a simple auto-anchored VWAP from the beginning of the year or from month to month to see what the primary trend was, right? And obviously the macro environment is the Fed's raising rates. We've discussed this, right? How important CPI days are and all of that. So if I understand that it's bearish, my stronger hand in any position is short. Right now, that might have changed a little bit this year. I think we'll talk about that in a little bit when I get to the charts. But the first rule, and it's really just a principle, right, is understand the primary macro and technical trend.
Now, Anthony, I'll certainly agree with that. And another reason, the way I look at it is, it's a force. There's pressure, right? So if you understand what the longer term pressure is or the higher level pressure is, it's very hard to overcome that pressure on an intraday time frame if you know that generally the pressure is coming down or it's coming up depending on what market we're talking about. And so, you have the concept of, are we going with the trend or against the trend? And if I'm going against the trend, I might not get as much distance on that trade as going with the trend.
Exactly. Anytime that the macro or the fundamentals are working with technicals, you get the biggest moves. Look at last year in the NASDAQ, right? Anytime that you have the macro conflicting with the technicals, you get choppy markets. Not always, but a lot of the times. And so therefore, you have two driving forces, using your words, helping you. Now, intraday, a lot of times you're going to see trend days. A trend day is a day where we're just trending in one direction. And we saw a lot of those last year. Up and down, I mind you. But there was way more trend down days because we trended down for the year. So on those days, those are the days you really need to capitalize on the market, and you need to hold your trades as long as possible. Now, the only way you do that is by understanding that primary trend. The next thing, the next rule I have, we're talking about 3 today, is understanding the day's environment. Seems simple, right? But I have a simple format, and we've talked about this here, and I'll go over it a little bit when we get to the charts. Understand when you come into the day, what type of day it has the potential to be. It's never going to be perfect. Yesterday, I thought was going to be a trend day up in crude oil. It didn't work out. It ended up being a massive reversal, right? That's because of what happened with equities. But understand that you have to put some formula together, something together that tells you what type of day it has potential to be. And that means right out of the gates, you can't just be going in and jumping in and clicking buttons. You have to let the day set up a little bit. And I think that this will really help traders once you know the primary macro trend and technical trend, and you get into the intraday and you understand the environment. And you don't have to be perfect. Like I said, I'm going to be wrong a lot, right? But the times that I'm right, I've really got to take advantage of it. The times I'm wrong, I just get stopped out. I mean, it's just that simple. The days you're right, you've got to really stay with it. So I think maybe we actually go to the charts a little bit early today before I get to the number 3 aspect of it, because I do think that you got to put some visuals behind this.
That sounds great. And Jason, if we jump to the charts real quick, I think, curious when we talk on our bookend shows, you mentioned stops. We definitely recommend using stops whenever we place an entry or in a position. But just curious, we also put in targets based on what the chart might be telling us. Curious to know, and maybe you'll explain that. Are there times when you don't have targets when you're in a position? So
that's
we'll
going to be
that.
the third phase of it.
Okay. All right.
And I will
Jumping
get
ahead.
to that. And it's so funny you mentioned that. And folks, I didn't tell Tom what I was going to talk about, but that's exactly what the third rule we'll call it is. So let's scale back a little bit. Let's talk about primary trend. I've talked about this a bunch of times before. I think it's really a simple thing to do. And I think really as day traders, it's one of the best things I've added to my trading is just auto anchoring a VWAP, okay, which is a volume weighted average price, to the opening day of the year, and then the opening day to each and every month. It gives you a good idea of what the current trend is. Now, you don't need to know the primary trend. Are we in a bull or a bear market going back a year? I don't believe for day traders it's that important to go that far back. I think you could go down as little as a month. And I think a month is very sufficient. So today I actually stepped in and I bought some S&Ps this morning, 39.15. We're actually almost sitting right at my price. And I'm going to explain why I'm doing that. And I'm going to try and hold this position, I hope. And I'm going to go over a simple philosophy here that we talked about understanding the primary trend. Number one is the macro right now. You could see more and more people are talking about the potential for a soft landing. Will that happen? I don't know. Yesterday I did a podcast. I'm not a macro guy. Talked to Andy Constant. I think he's one of the brilliant minds out there. Jimmy Jude was also on there with me, and we talked about it. And one of the things that they mentioned was we went from really a 10% chance of a soft landing to a 30% chance, and they think the market's potentially pricing that in. Whatever, right? Hold that with a grain of salt. That's really up to you and whoever you really want to follow on the macro side of things. But you do see that the market is firming up this year. You're seeing tech stocks firm up. So on the macro side of things, you're saying, okay, maybe it's not so bad. Maybe people aren't seeing this apocalypse that potentially was going to happen, right? Then you go in and then you look at some technical things, which I think are really important, right? I have a horizontal line here. If you look at this first day of the year, 23 at the bottom, right? And maybe I'll make this wider and wider. There we go. First day of the year, order flow anchored VWAP. I've talked about this a million times before. I highly recommend you go and get this on NinjaTrader. It's something I think you have to have a lifetime license for. I'll let you guys figure that out, or go to Ninja or contact them about it. It's a fantastic tool. I use it in pretty much every Develop Your Edge show. What you do is you anchor it to the beginning of the month, okay? If it's above it, it's green. If it's below it, it's red. And what's interesting is, even if I just go back and look at here, if you look at it, Tom, if we're above or below it, we're above or below it for good periods of time. Very rarely do you see like this Christmas tree kind of red, green, right? When it's trending above or below it, it tends to stay above it or below it for periods of time. And I'm looking at today as a potential blip below the red and potentially going back to green on a swing position. I've talked about this before. I've been buying S&P. Really, I've talked about this on the show a lot, trying to buy dips in S&P this year because of what I see right here. So order flow anchored VWAP holding from the first day of the year. And then you have the opening of the year, which came in right around 38.95, which is where I'll put my scales in down today. I will be a buyer all the way down to 38.95. Now, why that price? Because the first day of the year is something we're all marked to. So you're marked to an order flow anchored VWAP. How's the performance been? And you're marked to, all the funds are marked to where are we from the beginning of the year? They'll tell you some of these tech stocks are up 20 to 30% for the year. They're not going to talk about that they're down 60% or 40% from the beginning of last year. Everything moves forward, right? And so that's something that you look at, because that's a place that's going to be defended. And also you're going to know there's going to be some interest. So right now I look at it and say primary trend is telling me, at least in this month, is up. So I'm going to try and hold long positions as long as I possibly can, right? And just because of those two reasons right there.
And so this blip that you mentioned, this dip below the VWAP, you're saying historically these changes, when we see long trends of being either above or below, you see a flip to the other side. It might not stay that way, right? It tends to trend in over the course of the month, or at least in sections of the month, in the same vein, in the same trend.
Correct. What's something interesting here, and I'll show you something that I think is something that I look at a lot. And so let me go and pull up a horizontal line. So for this, on this particular day, you could see, go back to the month of December. We opened up, went lower. We spent majority of the time below it, below the order flow anchored VWAP, below the horizontal line, right? You see the blip up higher and then came right back down, and then it was red again. I'm almost under the same type of assumption right here, right? Open for the month, below the VWAP, below the open. Above the month, opening of the month, above the VWAP, right? So this spike could be, who knows, it can go down to the high 3,800s. I'll probably get stopped out and potentially have to get back in, just like I would be. I mean, you're not going to hold it through all of that. Really for me, my stops right now, and I'll show what that is when I get to my shorter term charts. I'll actually use a 1 standard deviation move outside of this area. So really probably right in the mid to high 3,800s, right around 3,860, 3,870-ish would be the most I would hold it, which really in the scheme of things, not that far from here, 50 points. If I'm looking for a potential 100 to 200 point move, it's pretty good risk reward from where I sit. And so that's what I'm looking at currently here. Now, and like I said, it's just one of those things where this is speculation, right? I mean, obviously I have no idea this could happen, but I've seen this happen over and over again. So it gives me a very good reason to step in. And like I said, everything has started to sound a little bit better. I know we got earnings coming up, but everything is starting to sound a little bit better. So you put that together and you have a reason to step in and try and buy dips a little bit, at least give them a shot.
Right. And this idea of the soft landing is kind of a bigger picture versus the earnings, right? Which is somewhat smaller time window, layoffs, market digests the layoff announcements, which could be, what happened yesterday with Amazon and Microsoft announcing layoffs, but the market digests that, and it seems like, well, it turns back to the Fed, right? It turns back, what is the guidance here? And could that, propel that back above the VWAP is what you're saying?
Yeah, I mean, once again, we don't know. I mean, one thing we do know is that the Fed is really between now and March is going to continue to raise rates. How much we don't know. But once again, I think that the market is starting to really price all of this in, right? I think that the market last year, from where we are last year to this year, the mood has changed a little bit. And right, once again, the mood can shift again. That's just what it is. Just like us traders, markets can be moody. It's not the easiest thing in the world, right?
Right.
To understand what, and really we're data point to data point right now. So something that I'll do then next is I'll look at, okay, look at today's, what is the context of today, right? And I'll come in today and I'll look and I'll say, okay, take a horizontal line. Everybody knows that I love the opening 3-minute high and low. And I box that out, and there we are right there. And if that VWAP stays in that range, which it is so far, then that tells me that it's going to be a sideways to choppy day, which is what I'm expecting. So any sort of movement out into the second, third deviations from today, I'm a buyer. This morning where I stepped in was somewhere in here. I told you I picked them up around 15. And I'll continue to look for standard deviation moves lower. Also, you could see an RSI to where we were oversold a little bit, not quite there just yet, but getting there. And I like that in the sense of oversold into daily support, what I think is January's primary trend. I like the fact that the VWAP is staying within today's range. I expect a day for us to be very choppy around this area, probably really test this 3,900 area, but eventually hold above it by the end of the day and into the rest of the week. And so then I use my short-term tools to help me execute that. So the third thing that we'll talk about is scales. So if you're an intraday person, you could look at this in a way of, okay, you box out a range, right? If you're doing a swing position like I am, it's a lot easier to box out a range. And I use these standard deviations. If you're really super short term, you could change the time frame. I'm using a 3-minute here. And I like to scale because scaling allows you to get in and feel the initial position. Like, okay, I'm long at 39.15 right now, right? And I'm using micros for this. And I'm using micros for this because it's a swing position. And I want to be able to get in and not feel the pain and pressure of wanting to get out right away, even though I know my stop's 50 points away. Doesn't matter how long I've been doing this. The minute you get in and it goes against you, it doesn't feel so great, right? But I have a range of execution to know that, look it, I'm buying these down to 38.95. Now they may not get there, so I have to scale in. So when you scale into something, it frees you up mentally to go in and execute within a range. And then I like this, the exit aspect the same way. So on a day like this, for me, intraday into a swing position, I buy on the second and third standard deviations. And then anytime we get back into the order flow VWAP, touch it up to the first, second, or third standard deviations, I rotate out of some of that position. That's also why I'm using micros, because I trade smaller and I'm able to rotate in and out of that position. And what I'll try to do is actually pay for some of that position as it goes up, right? So because I expect it to be choppy, I'll buy some here, sell some here, right? And maybe I get an opportunity to buy some again. If I don't, then the trade just runs away, and then I look for my bigger picture targets. But what I try to do is add some alpha, some money to the trade by rotating out of it, because I don't expect it to go linear, right? It's just not going to happen, not from what I'm currently seeing. And so, like I said, just to go over it, that third rule is scales. Too many people have a price point they want to get in, have a target. And it's great to have a bigger target. Like, I still think that we're probably going to head up to around 4080 to 4100 this year before it's all said and done, this month, I should say. So at the end of the day, that doesn't mean that that's going to happen. That just means that that's what I think can happen. So in order for me to hold a trade to that far away from here, I have to scale, because there's no possible way I'm going to be in a full position here even if I believe everything is right and everything holds, and I'm going to hold it to that final target, right? And so that's why I think that scaling and having ranges of execution for my third rule is imperative.
Okay, so a lot there. I do want to ask you, you mentioned the VWAP staying between the 3 minute opening range, right? The high and low of the first 3 minutes. Just curious, as you're let's say scaling in when you hit that second and third standard deviation on the bottom side of the VWAP, let's say the VWAP gets outside the opening range. Do you rethink your position, at least with the orders that you scaled into, and keep your original your first trade, if you will? What happens when that VWAP comes below that opening range low?
I think I stop adding for now because it could be a trend down day. So that's a great question, because right now, if this VWAP were to start to get below whatever this low of open was, let's just say it's 39.20, and say it were to get down to 39.19, I would just keep the initial longs I have on, and I would stop adding, at least for now. I'd watch for a test of 38.95, see what the market does. If it starts to hold that area and comes back up, maybe with a vengeance, it protects opening of the year on the bigger picture, then I step in. Now I'm actually scaling against the grain. So like as we sit here now, I'm buying against the grain. Some people will say, well, why is he adding to losers? I'm not adding to losers. I'm adding in a range of execution. I didn't buy all of my position at 15. I bought probably 10 to 15% of it. Right. And I'm actually working some at 05, and I'm going to work some at 95. So I'm actually putting them in at 10 point scales. But if all of a sudden this starts to get whacked, where this market starts getting creamed, and then you have an order flow VWAP that gets below the opening range low, then I say, whoa, man, slow down, stick with your 10% position. If you happen to get stopped out, it sucks, but I can get right back in. But that's why I use these three rules. Primary trend, understand coming into the day, I have conviction to buy the dip. It's not going to be easy, but I'm going to do it. What's the intraday environment? The intraday environment is telling me it's probably sideways to choppy. If you get to oversold conditions, you get to second and third standard deviations, step in and buy small positions, right? That's it. If that starts to change, then it really, it changes the whole rules-based system, right? Because all of a sudden now the intraday is saying trend down, while I'm thinking on the big picture, we could go up. I can't go against that. So right now it's really important that this VWAP stays above 39.20.
Well, and I think it's important to know with the volume weighted average price that the key there is the weighting. And so you'll notice as the price trends a little more linearly since about 1020 or so, that VWAP doesn't follow suit. And that's because there's a lot of volume in the first half hour of trading that kind of sets that VWAP. It's a little more rigid, right? If you were to think of something that is you're trying to move and it's really hard to move. It's really hard to move because there's so much volume traded in the first half hour. You need a lot of volume right now to move that VWAP. You're not going to get that unless there's a big news event.
Yeah, I mean, and that's the reason why I like the volume weighted average price versus a moving average, right? I'm looking at volume and price. And if you're a day trader, I think it's important to use VWAPs and order flow tools, because they are what's happening now, right? They keep you in the moment. Yeah, it's just extremely important to me. But I mean, those are the three rules: primary trend, intraday environment, scale targets. We actually had a great question from Ask DYE last week. Somebody asked me a question following the show. I'd love to get into that now if we could.
Can we, before we do that real quick, Anthony, we did have a question from somebody who's watching now. Swing to target asks, how do you anchor the VWAP to the month? So we know how to do it on the intraday. If we can go back to that monthly chart, can you just show the setup for that?
Yeah, that's an important question, because in order for you to do some of these things, let's find the easiest path to doing that, right? So you go to interval. So when you go to your properties in the order flow, see on here, I don't have the standard deviations right now because I wanted to show it to you. I just don't have them plotted. That's something that I do plot as well, and those will help me for stops. So like when we come back to that, then that's your choice on how you want to set it up. And then you go over to here, you go to reset interval. And when you hit the drop down, you go to month. So you can do session, week, or month. Okay. And then when you come over to here, you go to your edit input series. Actually, let's see. Yep, this is it. On each tick. I always mention this. Make sure you have it on each tick, not on a bar close. The reason why is because you want to see where it is moving throughout the day, and you want it to update every day. You don't want it to update at the end of the day, even though it's a daily chart that you're using a month view app. I really like using it on each tick because it just gives you more data. And so I think it's just important just to keep an eye on that.
Completely agree with that. We always advocate for using update on each tick for that very same reason. It gives you the latest data. But you did mention we did have a question. And by the way, if you're watching this show live, or if you're watching it, as a repeat, you can ask Anthony a question by going to Twitter, and just be sure to include the hashtag AskDYE. Throw in there at NinjaTrader, and make sure you're following NinjaTrader, because if you're located in the United States, we can send you, if we pick your tweet, we can send you a nice gift. But you have to be in the United States. You have to be following us at NinjaTrader. So Anthony picked out a great question from Day Trading Zoo, at Day Trading Zoo. How do you deal with the feeling of never being content, no matter how well you perform? It's great to improve after making mistakes, but when even good performance feels like underperformance, how do you deal with that? That's a great question.
That's a great question. And how I answer it is based upon what's happened to me in my career. Had success, blew accounts, built it up again, lost money again. Had the best year of my career, followed by the worst year of my career, right? Sustainability in this business is the most difficult thing. Anybody can find a winning day, a winning week, a winning month, and even year, maybe even multiple years. But to sustain it over time is extremely difficult. And the fear of me going back to the points where I was when, it was just bad, desperation, where you just make all this money and then just give it all back. And you're like, what did I do? I'm actually writing a book about this, about trading as a journey of oneself, and talking about how difficult it was to understand that someone like myself and many of you out there, the reason why you come into trading is obviously you want to build wealth, but you don't come from money like myself. And then when you finally make some money, you have no idea what to do with it. And you're just in this place of like, okay, I made a bunch of money. And what I did was I was just giving it away because I didn't feel, number one, I deserved it. And number two, I didn't know what to do with it. Right. And it took literally until, I would say within the last decade, I'm 45 now, to actually understand that, look at, man, you've got to start building wealth over time. Like if you've made some money, you've got to stay hungry, and you only can give so much back. You can't be that freewheeler like you were in your 20s where you made a bunch of money, lost it all. Okay, I'll just start over. At some point, it gets tiresome. And so you stay hungry by the fear of having to go back to the mistakes you've made, right? And it's unsettling. I remember, having to borrow money from family, putting myself in positions of not being able to make the bills. It sucks, and so to me, you always have to stay hungry. That's why you guys see me doing a bunch of, all these different things, right? Because I'm constantly trying to find a way to get better, or at least find a way to sustain the success I'm currently having, because it just is not easy. So I think that life experience puts you in a place where you start to realize that, look at, man, nothing lasts forever. I don't care how good of an edge you've developed. And we talk about develop your edge here each and every week. It's why I love this show, is because I know that what I have to constantly work on this. I have to constantly be hungry, because the minute I put my guard up, or the minute I felt like, oh yeah, wow, I'm in good shape. Next thing you know, I'm just letting things go. I'm not as protective. I'm not as defensive. And so I know that's kind of a long answer, but it's the most important part of your journey, is not finding the success. It's because I think that you'll find it. You'll find ways to make money, maybe not as much as you wanted. It's always the case, but sustaining any level of it, that's where the trick comes in.
Oh, thanks for that. I know you have a motor, Anthony. I know your motor is always going, and that I think is a very big key. And I think that's a great question, Day Trading Zoo. So please follow us on ninjatrader.com so we can reach out to you. And I think we're running up against
Yeah, we're
time.
on the time. I just want to mention one quick thing. I want to talk about CME Group's event contracts. You guys know here at Ninja, I'm actually working with Ninja and Tradeovate, placeyourtrades.com. We talk about these daily options every single day. I put a morning video out on placeyourtrades.com for free. And I think that these event contracts, which are daily options, I think are extremely important for retail traders because you can go to cmegroup.com to learn more about them. They're daily options on 10 products that we're all familiar with, even the S&P. Like today, because I also think it's a trend day, I bought some 39.25 yeses, some 39.50 yeses, which are calls, and it allows me. I bought them. One of them I bought at 375, and some of them I bought at like $8 this morning, and it allows me to participate in holding a winner. It allows me to hold something because I bought the trade, and they all pay $20. Like I said, you can learn more at cmegroup.com, and of course, what I'm doing at Place Your Trades with Tradeovate Ninja. And that's it, Tom. Just wanted to make sure we talked about that.
No, I appreciate that. That's great. And thanks again, as always. It's goes by too quick, and it's always fun to talk to you about what you're thinking about and learn from you. I always learn something. So thanks a lot, Anthony, for that.
Feelings mutual, my friend. And once again, everybody, follow NinjaTrader on Twitter. Do the SDYE. It's so much fun to hear from you guys. You guys open these questions up to us. It makes this show so much better because look at, we're all going through this journey together. I ask you to participate and just tag #DYE and follow NinjaTrader on Twitter. Makes it more fun for all of us. I wish you guys all the best. See you guys next week.
Thanks, Anthony. And thanks again for all you viewers. We'll be back in the afternoon with bars closing at 3:15. In the meantime, have a great trading day.
See you, everybody.